Hello crypto friends, welcome back to the channel. This is the long awaited Bitmex tutorial that I've been talking about for a very long time. So I'm a big fan of videos that get right into the point, so let's just get started, okay? So we're going to start off with the accounts tab. On the accounts tab, this is where you can deposit and withdraw Bitcoin, okay? Of course, this is the deposits tab. And then if you go back to the balances, you can withdraw here. One thing to note when you're withdrawing from Bitmex, Bitmex only withdraws Bitcoin once a day. Okay, so it can take up to 24 hours to see your Bitcoin transfer from Bitmex over to whatever exchange or wallet you're trying to transfer it to. It's not because Bitcoin's network is being slow, simply that Bitmex only withdraws once a day. So that was one of my biggest frustrations when I was trying to withdraw for the first time. I didn't understand that. Okay. The next thing to note, on Bitmex, you're not going to see BTC, okay? You're going to see XBT. So anytime you see XBT, that simply means that it's Bitcoin, okay? This is just Bitcoin. That's all it really means. The reason it's XBT over BTC is that when you're trading on Bitmex, you're not really trading with Bitcoins. You're actually trading a contract of Bitcoin. And the price is weighted through Bitstamp and GDAX, okay? It's through a perpetual contract or also a futures contract. You can read more about it over at the contracts tab. There's a lot more information regarding that, how the leverage works here, the multiplier, the contracts, the exchanges, and whatnot. They even have a nice little layouts of the equations they utilize to formulate the way the contracts are worked out on Bitmex, okay? So if you guys want more information, be sure to go check that out on the contracts tab, okay? Lastly, there is a referral option with Bitmex. I do have a referral link in the description below. If you note on the referral link, they do offer 10% off discount fees off for the next 6 months. So if you do use my referral link in the description, you do get 10% off fees for the next 6 months. So it does benefit you, benefits me. If not, then just completely ignore that. But let's get right into the trading tab. This is probably what you guys came for, the most important probably piece of the entire thing. Let's break it down. Let's make things nice and simple. Let me close out of these right here so you don't focus on these first. So let's focus first on the chart. This is of course going to be trading view. It looks like it's a trading view tab chart. And you'll notice how it says BXBT Bitmex. Again, it's using a Bitmex index weighted price from GDAX and also Bitstamp. So that's where it garners its price from. So sometimes if you're using trading view, perhaps the price might be a little different compared to Bitmex. It's for that reason, okay? It's just because it's using a weighted value from two different exchanges. Over here, you'll see the order books are the amount of sellers and buyers and the ones that are being filled. You also see right here on the depth charts the amount of sellers and buyers. If you're starting trading with Bitmex, just note something when it comes to order books, perhaps on every exchange, is that it tends to be manipulated. All right, so let's say right here, for example, right. Currently, you can see that there's a lot of sellers more than buyers. Oftentimes, you'll see whales kick in there. They'll set a huge sell order, let's say, for example, like 100, 200 BTC. And so you'll have retail investors go in there and be like, oh, wow, there's a lot of sellers. So they think to themselves that it's going to go down. So they end up selling their positions, end up putting their sales orders to go through. But in reality, what's going on is a lot of the whales, they're actually going to end up putting a big sell position so they can actually end up buying it. All right, they can actually end up making the price go lower, so they buy it at a cheaper price. So a lot of times the order books do tend to be a little bit manipulated. All right, it's just the way the crypto markets work due to its low volume. So I don't like to base price or whatever trades I'm going to make based on the charts or the depth charts and the order books, simply for that reason. Okay. You always want to look at the actual charts themselves, the candlesticks, and use technical analysis. One thing I would like to note is that if you do not understand technical analysis, I do not recommend you touch Bitmex because it is very risky. All right, you can lose all your money and become liquidated. So now that we have that out of the way, we also have all the other coins available. You can see we have Cardano, Bitcoin Cash, EOS, Ethereum, Litecoin, Tron, Ripple. So in case you're ever trying to trade other altcoins, they're available. Just note that Bitmex does remove altcoins from time to time. All right, you can see right here we have a screenshot of several coins that were available in the past: Stellar, Neo. I mean, the list just goes on. Okay, so be sure that there's going to be a time where eventually some coins can be removed or added. It's just the way Bitmex works. You'll notice that when you're working with a lot of these other coins, a lot of times they'll have less leverage. So you can see here, we can only do a 20x leverage compared to Bitcoin. We can do 100x leverage. The reason for that is that a lot of these altcoins tend to have less liquidity, means that there's less buyers and sellers compared to Bitcoin. Okay, so that's something else to note. All right, so let's actually make a trade. All right, so how do we set up a trade? What do we go about that? So in order to make a trade, we need to have these popped up right here. You're going to have the 3 tabs: your place order, your positions, and your current details. Okay, so let's start up with the place order. Okay, so if you guys remember, roughly I have around 0.1454 Satoshi, which is Bitcoin. If you pull up the little calculator, which I recommend you go download that if you have a Chrome, if you're using Chrome. So roughly that's around $931 worth of Bitcoin. Okay, so about $900 that I worth of Bitcoin. Let's say, for example, I want to trade $50. Okay, of my 900, I only want to risk about $50. So in case it becomes liquidated, I don't mind losing that money. So I would say $50. But if it goes up, let's say for example 2%. All right, I'm only going to make $1. That's not really good. Okay, so I'm not really happy with that. So what do you do? Okay, so what you do is then you open up a contract for a 10x. All right, let's say for example I'm willing to invest about a 10x of that portfolio. So instead of $50, it'll be around $500. Okay, and so what I do now is that you can see that my cost. So if I do this, if I go into a 1x, my cost is going to be around $500. Meaning that if it were to become liquidated, I would lose $500. You can see right here, I would lose $500. I'm not happy with that, all right? I want to lose less. Like I said, I'm only willing to lose $50. So what do? You crank this leverage up to around a 10x, all right? Because I'm only willing to lose $50. And you can see now my cost decreased right here now. So now if I become liquidated, for example, then I'm only going to lose $50 now. But yet my contract is going to be at $500. Okay, so I'm going to be working with $500, but yet if I become liquidated, I'm only going to lose $50. So essentially, it's going to be a 10x leverage. All right, so I'm working with about 10 times more. All right, so like I said, I'm willing I'm thinking that's going to go up. All right, if my limit price is going to be 6,424, meaning that the moment it crosses 6,424 here, the little green tab, that's the moment it'll actually end up going through. Like my order will actually be active. Okay, so now that we have it out of the way, you can also see we hover over this, we can see our liquidation price. Okay, my liquidation price is going to be 5,867. So what is liquidation price? Liquidation price means that let's say I'm longing, I expect it for it to go up. Then if it goes down to 5,800, so if it goes down right around here, 5,800 or so, I would lose those $50, but it has to go down this far. It has to go down that far in order for me to become liquidated. Yeah, 5,867. So in order for me to become liquidated, I literally have to have Bitcoin go down this far. Okay, so I'm happy with that. I say, okay, that's fine. I'm at a 10x. I'm only risking $50. See, my cost is only going to be $50, but yet my order value is about $500, so about 0.07. So if you pull up the calculator, my order value, you can see it's about $499, so roughly around $500. And so I'm happy with that. Okay, and so in order for me to become liquidated, it would have to go down 8%. So that's really good. That's enough legway. So I say, okay, we buy it, and boom, my order is submitted. So you can see right here, we have our order submitted, little green tabs, we're fine there. And so now you can see we have this little tab opener here. All right, so now you can see that if I hover over this, you can see we have the symbol, which is BTC. I'm trading Bitcoin. My size is going to be $500. So this you cannot change, all right? The more I click on this, you can't change that. That's set in stone. That's my contract. So in Bitcoin value, that's about 0.0777. So it's pretty good. My entry, again, it was around 6,420 mark price. My liquidation price, again, if it goes down 5,800, that means that I will lose that money. I would lose the $50 because that's how much I'm risking. All right. Again, that's my liquidation price. And my margin is at a 10x. So one thing to note is that I can actually always change the margin. If I click on this right here, you can see right here, I can actually add. So let's say, for example, I'm working with 10x. I can actually add more margin. All right. I can actually add more margin to it. I can change it. I can remove it as well, how much I want to remove. So it's all, you're able to change the leverage. Okay. But my contract will remain the same. My $500 will remain the same. What I'm going to be changing is how much I'm risking, okay? So if I actually move this down to around a 5x, now instead of risking $50, I would actually be risking $100, okay? Because it's only 5 times more from the contract price. And again, if I were to go down to even a 2x, I would be risking $250 because again, my contract is $500. So 2 times less than what 2 times less, okay? So again, but because I'm sticking with the 10x contract, I would be okay at risking $50, okay? So currently you can see that my unrealized potential. So currently I'm actually at a loss. I'm at a 0.13% loss. So okay, that's not too bad, guys. That's not bad. You can see over here we have the unrealized P&L. You can see now, guys, that roughly if I were to close my position now, I would be at a 1.28%. So I'm already at a gain right now. You can see that. But overall, though, if you want to close your position, say for example you've made your money, I'm already happy, I can either press this button right here to close it, or I can market close it. All right. So the difference between this and this is that if I press the close button, it would close at this price, at the current price, at around 6,428. Okay, which is okay. But let's say, for example, I press the red button, the market, it would actually close at whatever price it's currently at. So let's say, for example, Bitcoin is going parabolic or it's dumping. If I press the market, it'll sell at any price, all right, regardless of whatever it's at. But if I close at this price, it would only sell at $6,428, okay? So if, say for example, I press the close button, but it ends up going down to, see, notice how it went down to 6,426. It wouldn't sell the position until it goes back up to $6,428, okay? So you have to be very specific about that, very picky. Another way to also sell, in case, let's say for example, you're away from your computer, is also setting a stop market or stop limit. So that means that the moment is, let's say for example, it goes down far lower than what you expected it to, you can then just set up how much you're going to sell. So I would sell the total for 500, but I would actually set the stop loss right underneath. I would set it at around 6,386, around there. So you can set a sell stop, right? That means that if it were to go down to this price down here, to 6,386, then it will automatically sell it, all right, without you being physically there. It would just do it automatically. So this will protect you from being liquidated oftentimes. Say for example, you're working with a much higher position, you don't want to risk that much, you're already down around 2%. You can always just set a stop loss there, okay? So that's always really good. Also, instead of setting a stop loss, you can also take a profit, all right? So vice versa. Say for example, it ends up going high. So let's say I make good profit at around, let's say 10%. Let's say it ends up going up to 6,500. I can actually just put 6,500 here, and it would actually just sell it. I would actually sell it at around 6,500, okay? But again, you have market and you also have a limit, all right? Again, the difference to note here is that when you do a stop limit, is that it will only sell at that exact price. So that's not good, all right? Usually you want to do a market because it will sell it at any price the moment it triggers. That's really important if you're trying to get out of a large position really quickly. Okay, it's gonna protect you oftentimes. So you usually want to use stop market or take profit market. Okay, same with market with limit. Oftentimes you also just want to do either market or limit, depends on you. Okay, but essentially that's just how it works. Currently you can see I'm down around 0.71%. I mean, there seems to be a lot of resistance going on. If I pull up the 1 minute chart, it hasn't really moved that much, to be honest. I haven't lost or gained pretty much anything. But again, guys, if I want to close it, all I have to do is just press the close button on the market. Let's say, for example, I'm just going to close it. It'll tell you, hey, you want to sell your limits, sell your $500 contracts at 6,419. If you guys remember, I bought it at 6,420, so I'm down whatever that position is. So I would sell it. I would say yes. The order is submitted. We would just have to wait for it to submit. You can see active orders right here. It still hasn't been submitted, hasn't been filled. There hasn't been no fills. There's here you would see your stop losses, your fill history, your order history, your active orders, your closed positions. And let's say, for example, it's still active, you're kind of impatient, you can always just cancel it. So you can see order was canceled. So we go back to market and it would actually just close at whatever market price it's at right now. So currently it's around 6,420. So I would just close a market position, and just like that, my order was filled at whatever market order it was at. So it sold at 6,417. So I actually lost about $3 there, which it's not too bad, I guess. But simply that's how you make profit. All right, that's how you do it. But essentially that's how you trade with Bitmex, okay, on leverage. Just note that when you up the leverage here, you're not increasing how much you're going to multiply. The only thing you're doing is reducing the risk of how much you want to risk. Okay, so again, I'm at a 1x. You want, say for example, I have $500. At a 1x, I'll be risking $500. At a 2x, I would be risking $250. At a 3x, I would be risking around $150, right? 5x around, you guys get the point, all right? It starts going on. $100, 10x, $50, okay? My math might be off there, but you guys get the idea, okay? So it's about reducing risk here, okay? Where you increase your leverage, where you really increase it, is over here in your contract size, okay? So again, I'm only willing to risk $50. So I want to do a 10x. I only want to risk 10 times less than what my contract is. So again, I would put it at a 10x with a $500 contract. And if we head over back to our accounts tab, you can see here's my my Bitcoin amount. You can see I probably lost like $5 maybe. Yeah, like $2. I literally lost $2. So sad day, all right? That's like 2 McChickens there. But hopefully this is pretty comprehensive, all right? This is pretty simple. That's essentially how it works. All you're doing is reducing risk with the leverage. You're opening a contract, a set contract, and you're going long or going short. Again, if you guys have any trouble, if you guys have trouble understanding what longing and shorting are, or also leveraging, I also do have another video explaining what longing and shorting are, as well as also what leveraging is. You guys just can check out the playlist. Next to me to go watch those videos. But other than that, if you guys have any other questions, be sure to message me. Go message down in the description below. Other than that, then you guys can just ask questions down in the comments below, and I will answer that if it becomes a little too confusing. Other than that, guys, I hope you guys really learned something from this. If you're just now getting into trading, I do not recommend using Bitmex as your first exchange. Be sure to go check out Binance, go check out Bitmex or something of that nature, because leveraging is risky, all right? You either make a lot of money or you lose it all with leverage, okay? Because there is liquidation price, and that becomes a really important factor, okay? So with that being said, guys, I hope you guys enjoyed this video, and I'll see you guys on the next one.